Asia-Pacific markets were mostly lower on Thursday as China kept its 1- and 5-year loan prime rates unchanged, in line with expectations. The 1-year loan prime rate serves as a benchmark for most corporate and household loans, while the 5-year rate serves as a peg for the property sector. The 1-year LPR remains at 3.45% and 5-year LPR stands at 3.95. Mainland China CSI 300 and Hong Kong's Seng dipped, mainly dragged by hot pot chain Haidilao, which plummeted more than 6%, while Japanese stocks also declined. Over in South Korea, the Kospi gained 0.43%, while the small cap Kosdaq slipped 0.41%. Shares of the country's largest shipping company, climbed more than 3%. Meanwhile, the Taiwan Weighted Index touched new heights for the third day in a row, gaining 0.43%. Let's get more on this now with Josh Mahoney. He's Chief Analyst at Scope Markets. Great to have you on with us, Josh. Now, why are we seeing markets retreat? What are investors cautious about at the moment?
Well, certainly, I'm taking a relatively Eurocentric view at the moment, but certainly there's an increase in terms of political instability and uncertainty within our region. Of course, the French elections coming up and the possibility that Macron may lose some of his power and it could go to the far right, which means the possibility of increased borrowing and greater financial instability. We also have the fact that inflation over in the US is likely to keep the Federal Reserve on the back foot for much of this year, and we're entering the new earnings season as well, which of course in July means that everyone has to start again and start to consider the valuations within markets and whether they're justified. And if you're looking at the likes of the US markets, they replicate markets elsewhere in the world apart from a handful of tech names. If you take out the trajectory of Nvidia, which is up 44% over the last month alone, then ultimately you're left with the Dow Jones Industrial Average, 3% down on the month, akin to the moves that we've seen for the likes of the DAX and the FTSE 100. So certainly globally, stock markets aren't necessarily doing too well. It's just if you're looking at the Nasdaq and the S&P 500, they're inflated by the strength of Nvidia.
Right now, the People's Bank of China has kept rates on hold. What does this tell us about the current state of China's economy?
Well, by and large, this has been expected. We came into it thinking they were going to keep it on hold. The economy has had some jitters of late, most notably some weakness in the housing market. Once again, the housing data, we also saw weakness in terms of fixed asset investment, in terms of industrial production. So there's certainly the basis for the PBOC to take some sort of action down the line. It's probably more likely that they would hold off and wait until the Federal Reserve does something probably at the back end of the year. And if we were looking for some sort of move, probably wouldn't be quantitative easing, but something akin to that, where they would inject liquidity into the market, which would probably come along the lines of expanding the buying of homes that essentially had been overbuilt, oversupply of homes, that have been buying up some of those homes to try and stabilize the housing market. That's probably a good route for them to go down, probably towards the fourth quarter, I would say.